Mic check 1 2. Perfect. Welcome to Cash Tenant Markets. This channel operates on one principle: patience over impulse. We trade the higher time frames, weekly bias, daily structure, and clean entries. No scalping, no noise, no chasing. When the setup isn't there, we don't post. Silence here means discipline, not inactivity. Cool. So today I'm going to be breaking down a swing trade that we are currently in, sell positions, on GBPCHF, which is the Great British Pound versus the Swiss franc. So cool. So currently we're on a weekly time frame. What the weekly time frame means is that every single one of these candles is 1 week of price action. For example, this one is, it says Monday the 12th, so Monday would have been up here, and then Sunday would have been down here, and then look, there's another Monday there. But yeah, okay, so cool. When we jump on this chart, let's just remove all the drawings for now. What we already see is nothing. We just see the chart, right? We zoom all the way out to the start, and we can see that price has been making lower lows and lower highs this whole time, meaning it is in a bearish setup. No, it's in a downtrend. It's in a bearish setup. So our overall bias on the higher time frame already is bearish. That is just one thing that we're going to lock down. So example, if you have a notepad next to you, you're going to write bearish. I don't have a notepad next to me because I've already done this trade. I'm currently in the trade. I'm just breaking it down for you guys. I've already written it down. Okay, so it's bearish. That's our overall bias from the higher time frame is bearish. Now we're just going to look at all these wicks and all these candles and see if you can recognize any sort of thing. And oh look, my mouse has just suddenly been placed in a perfect position. As you can see, price has come down and tapped into this zone here, and it's also tapped into the same zone again over here, and it's also tapped into the same zone, closed on the zone, but just broken out with a wick. Each time it was tapped in here, it was just a wick, but price didn't close there. Now let's just bring our drawings back. Cool. This is why I've obviously marked these two, right? So price came down to here. It didn't close down there during this week. It closed up here, but the wick still touched. It didn't close down here during the week. It closed up here, but the wick still touched. This time, price ended up closing on that level, right? Let's just call this support for now, yeah? It is essentially a level of support, right? And this time price ended up closing, but price still broke through. It just never closed over there on the weekly time frame. So now price did that. After it doing that, we can see that price started to consolidate. Consolidate means price is moving essentially nowhere. It's just moving up and down inside a certain range. It's just hitting the same spot up here, hitting the same spot down here. It's not really making long big moves, big trends like this or this or this. It's just staying in the same place, right? So that's a consolidation. Then we can see price breaking this consolidation, and in my eyes this is a liquidity sweep. This is a draw of liquidity. Why is this a draw of liquidity? Because price has pushed up and then proceeded to push down and break the support. Why does price get liquidity? To break certain levels of support so it can move further. Price has been stuck consolidating. The sellers have been trying to push it down. We're overall bearish. We're overall trying to sell off, but price has not been able to do so because support has been too strong. So what does it do? It grabs liquidity and ends up pushing through, right? So that's why we've labeled this and labeled that. With that being said, let's scroll a bit. Now our time frame is Monday the 19th of September 2022. Oh yeah, overall this is like all the way back from 2010, by the way. 2022. Cool. So now this is our new range. Price has broken through support, turning it into resistance. Now this over here is resistance. This is resistance, meaning it's gonna resist when price comes to it, right? So boom, price has come. It's now created this new range. Why is it created this new range? Because price is trying to sell off, but price will never just sell all the way down. It will never just go down. Because why will it never go down? Because there's buyers in the market. There's always going to be buyers in the market. there wasn't any buyers in the market, there would not be any sellers in the market, and there wouldn't be a market at all. Right? So boom, price has come down to here. It's come up to here again. It's come down, it's come up, it's come down. It's essentially consolidated in this range. It's got down to the bottom, probably tried to break through again. It's gone back up. It's actually broken through both times here. But in my eyes, I just see these as draws in liquidity. I just see these as draws of liquidity. The reason why I see that, even this here would be a draw of liquidity. The reason why I see that is because it doesn't really matter too tough, because we're not actually trading right here in this section, but it matters in the way where we're trying to understand the market, what it's doing, where it's going, how it's doing it, like what, where, when. Like, when did it do this? What did it do? Why did it do it? What, where, why, sorry. Yeah, something like that, right? That's what we're trying to understand. When we swing trade, that's what we understand. We're trying to understand, especially with price action and market structure, right? We're trying to understand what price did, why it did this, and when it did that, and if price will come back to the same level where it had a reaction and do a similar thing, sort of thing. You know what I mean? So that's why we mark out levels like this. So right, price has obviously come up here. In my eyes, this is a draw of liquidity trying to push price down, but it didn't draw enough liquidity. Again, here is trying to push price down. This is in my eyes. It doesn't matter really too tough. It's just letting you understand what's going on in the market. And obviously you can see that this is our range. This is our new level of support. This is our level of resistance. Why? Because price has tapped here once, price has tapped here twice, price has tapped here 3 times. Yes, it looked like it broke through, but it didn't actually break through. Price tapped here, tapped here, tapped here, tapped here, tapped here, tapped here as well. That's our resistance zone, right? Tapped there as well. Doesn't really matter over there. Oh, I actually wrote resistance already. Cool. Now, these are rejection candles, and this is a draw in liquidity, because from what I can see here is, yes, price is consolidating, and it came up, drew liquidity, I guess, and pushed all the way down. I think this is actually oh no, it's not. No, it's not. Never mind. I just thought it was something for a second. But yeah, it pushed all the way down, right? And it's come here, and now we're looking at price here, and price is now pushed down under our level of support, turning it to resistance level. Okay, that's what we can see just from looking at price on the weekly time frame. That's all we've done. But we're going to do top-down analysis, right? Top-down analysis is where you start on a higher time frame, weekly, daily, 4 hour, and you scale down to a lower time frame during your analysis of what's going on. That's why over here it looks really cluttered and like it's like a complete mess, but it's not actually a mess. It's just when you zoom in you can see it more easily. So let's just jump onto the 4 hour time frame. Matter of fact, let's jump onto the daily time frame. Okay, daily time frame. Let's look at this, right? The reason why there's loads of these things is because so inside trends there are trends. You don't just have a trend on its own. Inside a trend is a trend because of the different time frames. That's one thing you need to understand when you're swing trading. Inside trends are trends. Okay, so this green one here is the daily time frame trend, this blue one is the 4 hour, and this pink one is the weekly. So let me just show you the weekly again. See, as you can see, for the weekly, comes up, comes down, comes up, comes down, comes up, comes down, makes a high, makes a low. This is continuing, this is correcting, sorry, this is correcting, this is continuing, this is correcting, this is continuing, this is correcting, this is continuing, and then put this on here, and we jump down to the daily. And as you can see on the daily time frame, there is another trend inside the weekly time frame trend, right? This is it. Continuing, correcting, continuing, correcting, continuing, correcting, continuing, correcting. So where on the weekly time frame this looked like just one correction and one continuation, this is actually multiple corrections and continuations in an uptrend to form one correction. You see that? Do you understand that? Hopefully you do. Let me just say it one more time. This is the weekly time frame. This is a correction and this is a continuation because it's bearish. If something's bearish, the continuation would it be going back down. If it was bullish, the continuation would be price going up in a trend. But in this trend, we can see everything is bearish. Our overall bias on a higher time frame is bearish. So this is a correction, this is a continuation. But when you're just looking at this singular trend here, so let's forget about this pink one and let's just look at this green one. This is obviously an uptrend currently, right? But Seb, our overall bias is bearish. So why is there an uptrend? Because there's trends inside trends, guys. You see a continuation, a correction, a continuation, a correction, a continuation, a correction, a continuation, a correction, a break of structure, a market shift. You see? And this is how I get sniper entries when I'm swing trading. This is like my favorite way to get sniper entries when swing trading, because it's just generally top down analysis, entering where I can see break of structures on lower time frames, because everything happens on a lower time frame before it does on a higher time frame. For example, obviously you can see here that the structure has broken because it's made like essentially it's made a lower high compared to this high, or an equal high. I just look at the bottom of the candles. Actually, I look at whatever suits me, to be honest. I don't choose between candles or wicks where it is. Like, you could even put on pivot points high and low, and it's not the best, but sometimes it's good. This one's quite rubbish, to be honest. But yeah, and it will show you. And all right, so so how I get sniper entries is generally just scrolling down into the smaller time frame to figure out, you know what, I'm going to cover that on another video. I'm going to do that on another video. I'm going to cover sniper entries on another video. But yeah, I'm going to cover all of this on another video because it will make a lot more sense. Let me just, one sec, let me show you, okay, the 4 hour, right? So this is now the 4 hour time frame, and what can you see? There's trends inside the trend. You know, I'm going to put this back here, you know. One second, lads. Was it there or there? I think it was there. Oh well, wherever it was, doesn't really matter. It looks so messy, you know. There's trends inside of trends. I'm going to remove this green one. But as you can see, so now with this blue one, I'm going to remove this as well. You can see that price is making trends inside of trends inside of trends. For example, this is a downtrend, right? Whereas this, as I'm going to now, is an uptrend, and then this is a downtrend, and then this is an uptrend, and so on, so on, and so forth. And the reason why is because price doesn't just move in a straight line. Price moves in waves. So it's wavy, it's going up and down, up and down, up and down. And each time frame, it does it in a different way, sort of thing. It takes longer, it takes shorter to actually make the trend, do the trend, whatever you want to say. All you need to realize is, I'm going to break this down in another video, just easier so you guys can understand. All you need to know is there's trends inside of trends inside of trends. Okay, to form one trend, you need to have multiple other trends inside of it. Okay, so now, we're here, right? And you can see price has broken the support. You know, let's go back onto the daily. So price has broken this support at the bottom. It's come back up and it's broken it again. It's come back up and it's kind of got inside of it and it's come back down, right? And then obviously this is showing us our bearish bias overall. So with trading, what you want to do is essentially tick off boxes. It's kind of like a 50-50 option. You're either bearish or you're either bullish. You're either going to buy or you're either going to sell, and you just need to tick off enough boxes to show that you're either buying or selling. You just need to tick off enough boxes. That's all it is. You need to make sure that so for example, let's say you have 10 boxes that say buy and 10 boxes that say sell, and they have a reasoning next to them. For example, buy because it's an uptrend. Yeah, let's just say that, random reasoning, right? And you have 8 boxes ticked on the buy and you have 2 boxes ticked on a sell, what are you going to do? You're going to buy. Obviously, it's more, you're more confident to buy. It's more confluences for you to buy instead of sell, right? It's just like building confidence. It's like a percentage game. You're like adding more percentage on until you're at 100%, or you're as close to 100% as you can get of the answer, of the prediction, of whatever you want to call it. So let's just go back to the weekly time frame. You guys would have been like on the daily, oh yeah, but it broke through here, so how can you still say that it's bearish if it's broken through if it is a comeback through the support, da 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 da. But look here, it hasn't. When you're in doubt, just zoom out. Yeah, say it with me, guys. When you're in doubt, just zoom out. Okay, that's what I tell everybody. And then you can see this 1 week of price action has a rejection wick. This rejection wick is from the upside, and it is a sell candle. It is a bearish candle. It's a red candle. And where is the candle closed? Just underneath our range. And where is the rejection wick? Above our range. Okay, now same thing here. It's got a rejection wick. It has a rejection wick because why does it have a rejection wick? Because price is bearish and it's pushing down. It's pushing down. It's going to carry on pushing down. Price is bearish overall. Okay, let's jump onto the 4-hour time frame. So now we've seen that rejection wick, right? We're on a 4-hour time frame. Let's just like do it like this, right? So we're just looking at this. We've seen it come up. We looked at the weekly time frame. We've seen that rejection wick. Now what we're waiting for, a break of structure and a market structure shift, or a structure shift, whatever you want to call it. Top down analysis. How do you get sniper entry, Seb? By waiting for these things. And when you see these things in the lower time frames, you can enter on precise entries. You can enter like very, very, very precise. For example, my entry on this trade was there, 1.06105. that was my entry. 1.06 105 06 I mean 015, wasn't it? Yeah, so it was roughly over here. 1.0015. It was roughly, wait, let me just double check that. It was 06105. Oh, 06105. Yeah, so it was right here. What a sniper entry, Seb, right? What a fucking sniper entry. Come on, who can tell me that's not a sniper entry? That is a sniper entry. That is completely a fucking sniper entry, bro. Right in the headshot. You know what I mean? So essentially, this is a break of structure. This is a market structure shift, and we're seeing this on the 4-hour time frame. We could easily jump down to 1-hour time frame and see the exact same thing. Broker structure, market structure shift, but we could see it more clearly and earlier. For example, I entered over here 106 105, literally right here. Most perfect entry I've ever gotten in my life. Most perfect entry, I'll be honest. This is a fucking sexy trade. Yeah, boy. One of the most perfect entries I've ever got in my life. Anyways, as I was saying, yeah, so you can just zoom down as much as you want to find entries, right? I didn't actually zoom to the 5-minute because I just didn't see the point of doing so. Like, I already seen everything happen in the 4-hour or the 1 hour. Because look, the 5 minutes just looks all messy. Like, honestly, look, I can see a break of structure there, and I can see a break of structure here, and I can see a market shift there, and I can see one there, and it's just all noise. It's just like, oh, I don't want to see all of that. Like, oh, like, get out of my face, bro. Like, sort of thing. But here, I'm only seeing 4 candles. I'm only seeing 3 candles. I'm only seeing 6 candles, not 152. It's just more what I like to see. It's just more. It's better for me, you know, in my opinion. I don't know, maybe you guys would like to jump down to the 5-minute, but personally I would say don't jump down to the 5-minute. I would say stay on the 1 hour. 30-minute is minimum you should go to be honest. 30 minutes is minimum. I would say when you enter, sorry, I'm tired. I would say when you enter the trade on MetaTrader 5 or wherever you're entering from, whatever platform you're entering from, enter on the 5-minute or the 15-minute. Like when you get your entry, so you can just do it like really nice and precise. But overall, plan your entry on the 1 hour and maybe the 30-minute, minimum 30-minute. And yeah. Oh geez, why am I so tired today? Oh fucking hell. I'm gonna get a good sleep later. Okay. So we actually entered over here, yeah. And you might be wondering, what's all of this then, Seb? Why do you all have this all this mess over here? So I'm going to explain to you why I have all this mess over here. So we were essentially in this trade, right? We were in this trade over here. We took a short position from literally right here. We're still in this short position. By the way, fuck if I don't care about this anymore. We've been in this short position from over here, yeah. We entered over here, and it got to here, right? It made it low. This is when I was up 3 grand, 1.04923. Oh no, over here is when I was up 3 grand. Yeah, so that was over here. So over here I was probably up to 1 point something, like bump. No, only a couple of bills, you know. Nah, probably like a grand I was up over here. And then I was in profits, in a grand profits over here. And then, so essentially I was like, oh geez, why has price come back up here and why is it consolidating? I got a little bit scared, right? So what I do is I proactively manage my trades. I actively manage my trade. What do you mean actively manage a trade? It's a swing trade. You're meant to set and forget stuff. Oh, set and forget my fucking ass. I don't care, mate. If I'm down here and I'm on let's say 1.5 grand, then randomly I go up here and I'm only on like £500, I'm gonna look at my chart, I'm gonna be scared, I'm gonna be like, oh shit, am I just gonna go back to my entry? Is price gonna just fuck with me and go back to my entry? Or do I not want to actively manage my trade? Do I not want to understand what price is doing currently? And so even if it is wrong, nah, it's not wrong, even if like everything isn't precise on point, because obviously we're not scalping, at least we are proactively managing the trade. So at least we are understanding what the market is doing in that current time for it to be acting this way, for it to be doing this, right? So obviously price has made a new low, then it's made its new high, a lower high than this high previously, then it's made a higher low, and I've seen it make a higher low, then I've seen it make a lower high from this high, and now I'm getting a bit scared. I'm like, yo, what's going on? So what did I do? I marked out a few levels. I marked out levels where prices reacted. Price reacted there, reacted there, reacted there, reacted there, so I just drew this out. I marked here as well, price reacted, and I marked here, price reacted there. Not much reactions, it's still a reaction in my opinion. Like these levels, I'm not trading based off of these levels, so these levels don't have to be accurate to the bone. Like they don't have to be like proper skin accurate. Like they don't really have to mean much, sort of thing. It's just for your own confidence, so you know what is going on in the market, right? And from what I could see is these are all, not all of them, but these are kind of like draws in liquidity on maybe the higher time frame or whatever time frame it is. They're kind of draws in liquidity so price can break this low. Because what is price trying to do this whole time? Price is trying to go down. That's why price got down to here. Price is trying to go down, right? And so price tried to break this low. Sorry, price made a lower high, and it should have come and broken this low, right? And then it should have made a lower high, and then it should have come and broken that low again, made another lower low, but it didn't, so I got a bit scared. And I'm like, all right, cool. These are all draws of liquidity. Why are they draws of liquidity? Because, especially of this one, because look, this is essentially price consolidating in a couple days time, Tuesday, oh sorry, no, not a couple days, yeah, Tuesday throughout till the start of Wednesday. Then it comes up here above everywhere else, above all of these, all of this consolidation. It looks like it's grabbing liquidity and pushes to the lowest part it's ever been, right? But it still didn't break that low. This is why I wrote the highest is more liquidity. The highest it goes, the more liquidity it goes, and the lowest it goes further because it's grabbed more liquidity. So for example, this only went to here and it went low to here. This only went to here and it went low to here. This only went to here and it went low to there, because it's not going that high, so it's not going that low. This one went quite high, so what did it do? It went quite low. Man, it's obviously not broken this low, so it needs more. It's like, for example, it's like buyers are sitting here saying, you can't pass me, you don't have enough. And it's like, all right, cool, let's go get enough then. And then it goes back, grabs 10 rocks, comes back, throws the rocks in the buyer's face and pushes past the buyers. You know what I mean? The rocks are over here. It's like a car. It's like a car driving, going vroom, vroom. And it's like, oh shit, ran out of petrol. gets petrol. Yeah, today. You know what I mean? Anyways, but yeah, this will just be proactively managing my trade. Doesn't really mean much. It's just me drawing out levels, trying to understand what price is doing, and then prices come down, made this new low, and then it's come back up and it's made a new high, a lower high to be precise. And then you guys will be looking at a chart and like, but Seb, price is just gonna rally in your opposite direction. Look, it's made a lower high, and then it's made a higher high than that low. No, because this is not a higher high. This is just a high. First of all, this is just a high. When you make one high, it's just a high. If you made multiple, then it's a higher high. But this is just a high. And guess what we are on? The 30 minutes. If in doubt, just zoom out. Boom. Let's zoom out to the 4 hour. Now what is it doing? Price is making... I'm not even going to say it, matter of fact. Nah, I'm joking. I'm going to say it. Price is making lower highs and lower lows. And what does this look like? It just looks like a lower high. That's what it looks like, a lower high. That's all it is, it's a lower high. And so what if it did this little bit of shenanigans over here? It's made its lower high, and now it's time for it to make its lower low. Price will always follow a trend. Price will not go sideways. Price will not, well, it will, it's consolidation. Price will not go backwards. Price will always follow a trend. Price has to follow a trend. Price moves in waves. This is price action plus market structure. So understand that, right? We are targeting, let me show you where we're targeting. Down here. Where did we enter? Yeah, roughly there. We're targeting down here. And where was my stop loss? Just above the range. This is the best trade you can ever get in. Look at the risk versus reward. This is like a 1 to 17 risk versus reward, in my opinion. I think that it looks like, I don't know what this means, ratio 14.83, I don't know. But this is a 1 to 17 risk versus reward. And guess what? I never went in drawdown for this trade. Why? Because I got such a sniper entry point. It'd be nicer if I got in up there, but I didn't have enough confluences to get in up there. Price could have come here and just gone straight back up. I didn't have enough confluences. But I did to be able to get it over here where I entered, and guess what? We're currently in this trade. Well, actually we're floating about 1 grand now. This was earlier. This was way earlier. But we're in a nice trade either way. We are. We're in a fucking amazing trade. So yeah, that was it from me. A quick course on price action and market structure. Hopefully you guys enjoyed. Hopefully you actually learned something from this and you understood how easy, not easy, I wouldn't say it's easy, but it's quite simple to see what price is doing, where it's going, how to track it, how to find where it's going next, what a trend is. And yeah, have a great day. That's been Cash 10.